Good morning, everyone. I'm literally starting early because I had a problem setting up the stream. So I'm hoping everything's going to go according to plan and everything's going to work out. So I'm just going through it, just making sure everything's working. Don't forget the risk, guys. Most traders do lose money, eh? Okay, so bear with me while I try and check everything out and try and make sure that everything's actually working. Everything's actually on. I tried to put the stream on earlier and it gave me all these error messages. You know, technology, when it does that to a guy like me, I'm kind of like, whoa, here we go. That's always a bit of fun. And there's just error, and that's that's quite insane, to be perfectly honest with you, seeing all these errors. I'll get to the trading bit in a moment. We'll have a look and we'll see what's going on here. Let me just make sure that everything is working according to plan. And it does appear to be. Morning, Tarek. Good to have you on board. Good to have you here. Yeah, everything seems to be doing its thing. I'm actually surprised. Gave me a fat error earlier on, something between the OBS and the YouTube and all the rest of it, and actually wouldn't start up. Would you believe it? No, it seems to be working. Morning, Kevin. Thanks, man. Yeah, I'm having one of those technological nightmares here. All the red writing and, you know, stream, like it says forbidden and those kind of words, you know, those are the worst words you want to see. And then everything suddenly, I did a workaround here and everything's working. So, okay, so it's working. And yeah, I am starting a bit early, so be it. Those of you that come in at 11, so be it. That's all good. We'll just have an earlier day today. That's fine. Looks like the US 500 is going up. I don't know if you guys noticed, but our New Zealand dollar, US dollar trade failed dismally. Now I'm looking at the Aussie dollar, US dollar trade to go the other way, to go short. Just waiting for it to break down a little bit and give us a better entry, because I'm seeing a huge head and shoulders here. Hope you guys can see it as well. Massive head and shoulders lying here. And I think that's what took us out in the New Zealand dollar, US dollar as well. That was quite a big knock. So the account's taking quite a knock for the month. We're a bit down, a couple $100 down. Not a great start. 1st of April, April Fool's Day. No April Fool's jokes today. Okay, good morning, Rob, fellow traders. How's it? How's it, Luigi? Welcome. Okay, not everyone's going to be here because obviously we've started a bit early. I'm just glad to see that it's actually all operational and working. Phew, that's like, I'll probably have to look in the back end before Thursday and see what's going on there. It's probably something to do with the main setup or something to that effect. Technology, always got to work around it. Thank heavens I've got a little bit of savvy on computers. Morning, Eugene. Good to see you. And so the most important people are here, actually. That's like quite cool. And not to say that everybody else isn't. Everybody else is also very, very important. Just saying, you know, like the main crowd's here. Let's put it that way. It's good to see you around. Yeah. So what an interesting moment, eh? S&P 500's been doing its collapse thing. Everybody's been calling it, saying it's going to die. And I've seen it 100 times over the years, where everybody thinks it's the end of the world. And in general, the S&P will correct around 10% in general. And when it corrects 20%, that's like a major indent, big time move. So exciting, but I wouldn't panic. 33%'s a crash. That's quite serious. That's a bad one. That's a monster. 33%'s a really bad one. Watch out for those ones. Those are the ones where you wake up on Monday morning and it's all turned to ash. Always doing the coffee, eh? Roy, how's it, man? Haven't seen Roy for a while. How are you doing? How's all things going? Hopefully everything's going well for you there. And you're doing well. That's important. So we've had questions about the trend. Which way, up, down, rest, left, right, and center. So I'm going to go over the trend today, particularly for one of you guys. And which trend, short, long term, as well was a question. Which trend should I trade in? The short-term trend or the long-term trend? And then there was the question of the repeat trade of the day, which I did bring up in the members video this morning, which I'm sure most of you would have seen anyway. Why do I call the same trade of the day maybe 2 days in a row, or a Monday and a Friday and a Monday? You know, a lot of people actually trade on the same instrument daily. They don't even choose different instruments to trade on. And effectively, if the trade looks good, there'll be a lot of people that haven't traded into it. And I'll put it out there for those guys as well, even if I'm in the trade already. So don't let it confuse you. It's just, I'm looking at it as that looks like a decent trade. And also I put out all the other trades as well, all the other possibilities that are there. And of course, in the video, I try and go over what the day looks like. You can choose for yourself which way you want to go. But if you are already in a trade, just bear with me. Just look at the next one. I normally try and bring up 1 or 2 others as well. But sometimes, you know, you don't want to force trades. You just got to look for the trades that are coming to you. Now, admittedly, the one that failed on us is the one that we brought up twice, unfortunately. I brought it up on Friday, I brought it up on Monday, and then it failed dismally and cost us $200. So, you know, I can't win them all, eh? It can't possibly be sunny in Scotland, Kevin. That's just impossible. How is that even possible? You know, 1 day of sunshine in Scotland. Yeah, no. I don't know. I'm not going to comment because I'm from Scotland, but I got my personal feelings that it's maybe a little better than England. I don't know. You guys tell me. 6 minute in and YouTube over their first advert in. You know, whether I switch ads on or off, they're still going to put the ads on. So sorry, guys, nothing I can do about that. And somebody was asking me about the members area as well the other day, how they take the payments and all that. I really don't know. That's a YouTube thing. I don't even get involved with that. They send me those proceeds, and they're useful for the channel. They help with the equipment that we need and stuff, and my time and what have you. So that's fine. It's not going to make me rich at the moment. But yeah, I was looking at that as well because somebody asked me for a WhatsApp number, and I'm thinking, you know, WhatsApp is a bit tricky because, you know, having a lot of people contacting you on WhatsApp, you know, those groups where you just get irritated because the thing's just keeping on going and going and going. So I didn't want to put that out there because that's my phone, and when I go out with it and I'm sitting at a restaurant, I don't want it binging on me every 5 seconds. But I am thinking of things along the lines of, if I do go that route, I might put it out as a special offering to certain people, but with conditions, and I'll have a look at the whole scenario and see how we go. Let me know if you guys will be interested, but that will also be a very much a membership thing, and it'll be a closed WhatsApp group, whatever the case. But you know, I've got to keep that personal, and I mean, you guys will have felt it as well. You can't be sitting with your friends having a frosty and your phone's going nuts all the time. It's insane. You have to remember that I'm dealing with people from all over the world in different time zones as well, which makes it kind of interesting. For example, last night I was getting messages when I was sitting, relaxing, watching TV, for example, later in the evening, and I don't mind. It's just, you know, it's a lot to take in. So I've got to be very careful about how I put myself out there. So as long as you guys get that, that's cool, you know. Yeah, I don't know, Kevin. Geez, luckily, you know, I've been able to sort out most of my IT problems over the years, but I can tell you, computers have driven me insane. A lot of my gray hairs have probably come from technology and IT. You know, amount of times I've had to rebuild a computer, and you know, the funny thing about a computer, there's not a lot in it. There's not a lot in it at all. There's just a motherboard, a bit of memory, a CPU, a fan here and there, you know, and some connection. It's so simple at the end of the day, but it can give you a headache, yo. I tell you what, it can give you a headache. Mainly because you don't want to spend the money and replace an entire motherboard, for example. Yeah, that can be can be quite tricky. So US 500, where's it going, guys? If I look at the US 500 on the 4-hour chart, I look at what we've got here. Let's just redraw this trend line because it does look a little bit ominous, eh? So I'm just going to redraw that a bit because I don't think that's quite where we need it to be. I think we need it to be more, and I don't want it, and this is where the complications come in, where a lot of questions have come in. Do we look at the day chart and take the trend from there, or do we look at the 4-hour chart that we're trading on and take the trend from there? So my advice to you guys is look at the day chart and look at the pattern. What pattern have you got? And just look at the day chart and say, well, in the day chart, this is in a range. It's kind of in a range. And it's sitting in this price range between 61 and 55. So you've got to decide for yourself whether you want to trade into that or not. Now, what we've got here, if you look at the US 500, which is why we're trading into it, is it's at the bottom. It's on the support. Not completely at the bottom. The bottom is more further down in these areas. Let's just have a little look. More further down towards the 53.91.54 level. So your actual bottom, and there's another bottom down here, which is down at 52. So I did say that it could actually get down to 52, but it does seem to be sitting on the support level and holding on the support level. It does seem to be a range on the daily. But if you take this back to the 4-hour, you are in that range, but you also have a trend. Now, what I always recommend is trade the trend in the time frame that you're trading on. You can take your levels from the higher time frame and you can understand what your levels are. But when it comes to actual looking at where the price is going, rather look at where the price is going on the time frame that you're trading on, because that's where you're trading at the end of the day. So yeah, take it back. So now what you have this bearish trend in the 4-hour time frame, which has gone down. Then it's gone along, it's broken out of that resistance towards the upside. It's come back, it's retested twice, and then gone up. And us in our greater vision decided to go long because it went up. And it's now falling all the way back down, and it's actually retesting the main support. But you could also call this a retest because it came down, went out, retested, went up, come back. Now it's retesting again. And if it gets through this, it could possibly go all the way up. But now what we've got to wait for is for it to get above that high before we can show any confidence in a good long trade on the S&P 500. So what I've decided to do is simply hold the US 500 in our arsenal. Just keep it going. And hopefully it will eventually play out because it's already corrected from 6,150 all the way down to 5,500. Now, in my opinion, that's around 600 points, and that's 10%. So you've had the 10% correction. Anything over above this is a bit of a deeper correction. So I'm happy to look at this and say, that's not too bad. If it gets all the way down to 52, we're starting to look at something bigger, more like a 15% correction or something like that. So in my opinion, I'm quite happy with it sitting at these levels. You know how many times I've said that, Kevin, I'm staying out of the US 500 just now because there's too much going on in the world connected to the US market, making it unpredictable. And that's kind of been the scenario of our year so far, if you think about it, Kev. Our year has been kind of unpredictable. It's been kind of difficult. Just when you think you've got on top of it and you think, well, that's a good setup and it looks like I can take that trade, and you take that trade, in many instances this year, it's kind of gone against us. It's kind of turned and gone against us before it's played out. So there's been a lot of instances where that has been a problem. So the short-term traders, the scalpers, have probably had a better year than we have because they get in and out much quicker. So when something happens, they're getting in and out on a regular basis. But where they fall short is where the market kind of changes over, when it starts to sort of go in the direction it's supposed to, when it starts to do the right thing, then obviously they're going to fall short because they're going to start taking those big losses. When markets head in those directions, they stop bobbing around like they are at the moment. So all this bobbing around, back and forward, up and down, decision changes on a daily basis, causing the volatility in your trading. You need the volatility, but the volatility is too small at the moment. It's not taking a direction. It's kind of going up and it's going down. It's going up, it's going down. At the moment, the US 500 is kind of taken a downward direction for now. So in general, you should be bearish on it. But I look at it as it's at a turnaround point. There's a double bottom here. It looks like it might want to turn around and head to the upside again. Euro US dollar is still fine. We're still holding on to the short because we're very close to the resistance and we're very far from the support. So we sell. Brent crude oil is on the up. It actually did break through here. Remember I said we were long all the way up to here. We got taken out on the trailing stops. I said, let's wait for it to break through this level, which it did. At the 73.94, we bought back in. 74, I bought back in for us. And it's heading on to the upside. Now all we've got to do is hope that it goes all the way the 78 or the 80 or whatever we might need it to do. And then, of course, today's trade of the day, the Aussie dollar, US dollar. I'm waiting for this guy to give us a strong signal that we can sell further on this head and shoulders, because at the moment, head and shoulders hasn't quite played out and it is still in play. We're waiting for that to... yeah, we got the Trump tariffs kicking in. Yeah, you know, the Trump tariffs are actually a bit of a annoying situation more than anything else. This whole business of 1 minute it's on, 1 minute it's off, 1 minute it's 25%, the next minute I'm going to double it if you guys gang up on me. You know, here in South Africa, we've been cut off completely. Just about now is stopping all, you know, the money coming our way. All the support, all the military support, everything is stopping for us. So, you know, that's quite a big change for South Africa as well. Okay, so the question was how to trade the trends, how to trade with the trend, how to trade the range, how to counter trade the ranges. So I don't know if I need to go through this again, and I am waiting because I did say I would start at 11, and we have kind of started at 10:30. So because that question did come in from one of the guys on the system, and he's probably going to come on at 11, I'll wait, and then we'll go over that, and we'll deal with that as we go. I know that for the repeat trade of the day, that would have been Eugene, so they're all good. How's it, Shane? Welcome. I'm just having a peaceful start because I had to start early because I had some technical glitches. So don't worry, we haven't gone over much. We've just been talking about a few trades and a few things, and you know, how to make millions in the market, that sort of stuff. Yeah, no. Somebody asked if I only trade support and resistance, or if I trade the trend lines also. And I think that's kind of clearly obvious in the videos, trading both. They're actually both support and resistance. Your support is straight and your resistance is straight, but your trend resistance and trend support is also there. So it's there and thereabouts. You use both. At the end of the day, you can't just use the one. That's not how it works. I tried drawing the trend line starting from the month and then the week and then the day and then the 4 hour just for fun. But thought the month goes back too far. It's not relevant. Morning shame. Yeah. Yeah, there are a lot of traders out there, Kev, that will go all the way up to the monthly for their levels. Some will go to their weekly for their levels. I prefer the daily because the daily is very reliable. And my opinion of the daily being very reliable is not because so much of it because of its time frame, but if you understand trading and traders, you will find that the larger percentage of traders actually invest and trade on daily, not weekly, not monthly, not 4 hourly, not hourly. Just about everyone trades on the daily. So you're going to get a lot more accurate information from the daily charts rather than the monthly charts. It's going to be more beneficial to you, generally because more people trade on that time frame. So the movements that are occurring, whether they be on the weekly or whether they be on the daily is going to give you more accurate movement because most of your traders are using the daily for their levels. And what you're looking for in the market is the liquidity in the market. If you're looking for the liquidity in the market and you're looking for the orders in the market, you should be looking for the areas where most traders will be. And most traders will be on the day chart. And that's why that level is so reliable. So when you go to the month and you try and take your levels off there, I get the fact that it's a strong amount of information because it's a whole month of information, but it's not really going to give you the immediate direction. So I would say, even for an investor, as an investor, I'll look at the weekly chart because the weekly is going to give me quite a lot of good information as to where we're going over the next year, over the next 20 years, over the next 3 years, whatever. The weekly is going to give me that information. I don't even use the monthly for that. I think monthly is sort of almost like an overkill. I actually still look at the day, even for my investments, and then I will push it over to the weekly just to give me an insight as to what I think the markets might do on any particular share. Because when it comes to investing, I invest in shares. When it comes to trading, I keep trading to Forex, commodities, and indexes. And the trading, like, we take the levels, I'd say maximum from the day, and then using the 4 hour as a basis, for that, for the case. The big thing, Shane, is, more to the system than what she shows. Is, yeah, fibs are good just about any time frame, but fibs are good. Fibs are good. But the thing with more to the system, what you've got to be careful of is getting caught up in systems. Because even if you take all the systems off and you've got a blank chart and you've got a gut feel and you say, I think that's going to go up, and you take the trade, you're still going to have the same results as if you have a system. What you really need, like I always tell you guys, is the strategy. The strategy behind the system so that you can manage the losses and manage the wins. Now, the strategy is more important because that's the psychology of trading, and it's the ability to manage the losses, the ability to manage the wins, because that's what keeps you in the game. The system, like I always tell you, is just going to give you the high probability trade. And we feel more comfortable because we draw lines on a chart, because humans are creatures of habit, so we look for areas where we know this has happened before, and in all likelihood it will happen again. But be careful of getting sucked into systems, thinking that the system is the only thing that's going to make you the money, when in fact it's you that's going to make you the money with your strategy, with your business plan. The system will just give you an entry. Remember that. The system will give you an entry, and it might give you an exit. But the biggest thing that the system gives you is that entry point, the confidence to take that entry. For example, do you know that when I invest, not trade, when I take an investment in a company, like whether it be Amazon, Nvidia, Coca-Cola, McDonald's, it doesn't matter. When I take an investment, do you know that in reality, and full disclosure here, in reality, I don't even look at the chart. I literally don't care where the chart is. Not interested in the slightest. If I'm taking an investment, I know that I'm going to buy into that product. In some cases, I'll know that the price has dropped or it's gone up, or, you know, whatever the case, there'll be some hype around the stock, the reason I'm taking the trade. But I won't even bother looking at the chart. I do not care where the chart is at all when it comes to investing. So it's kind of funny that when we get to trading, the chart becomes more important, because the chart is the thing that helps you to take the trade. The chart is that sort of that kick that says, you need the chart if you're gonna take the trade, because you don't know which way to go. But if you had no charts whatsoever, would you trade? Would you be able to trade? Well, if you had a strategy and you had a business plan, you absolutely would be able to. But the charts kind of help you, and they kind of show you where the liquidity is, and they kind of show you where, you know, that humans are creatures of habit, and they're going to do the same thing over and over again. And that's what the charts are for, at the end of the day. And yeah, Shane, the ads, like I said to Kevin earlier, you got to understand with the ads, I don't know, you can't really switch them off, because even if I switch them off for myself, then YouTube still advertises. There's nothing you can do about it. They keep them on. I think you've got to have premium to get around it or something. I don't know. That's Hi Cheeseburger, nice name. Yeah, I love the name. If you're a creator, you know, let us know. That said, guys, if anybody on here has a video channel or something that they want to, you know, say they've got a channel, I don't mind if you say you've got a channel here. I don't mind. Yeah, Shane, me too. I'm also too cheap to pay for premium. I sit watching videos at night on YouTube, and I sit skipping the ads, and yeah, I get it. But I actually don't. The ad blocker doesn't work, Cheeseburger. It really doesn't work. Trust me, they'll stop showing you your videos. Do you know that? That's happened to me on my big TV and stuff like that as well. They just tell you, no, you can't watch. You try to put an ad blocker on. There's no chance of that. Forget that one. Doesn't work. But no, I'm not adverse to ads anymore, because the ads now do support the channel. They pay for the channel, and, you know, when I need something, whatever the case, to pay for this kind of thing going on here, it makes it free for me. Makes it nice. I don't have to pay. So I can have fun for free. That's great. Yeah. But yeah, I myself once tried the ad blockers, and they don't work. It's a funny thing, that. Yeah. This is the Aussie dollar, US dollar. The Aussie dollar, US dollar was what I called today. It's been a kind of a peaceful day, all said. It's a pity about the New Zealand dollar, US dollar going against us, but that's my fault. Gold is going to the moon. Shane, I actually called it in the members area this morning. I said, you know who's going to get excited about gold today? It'll be Shane. Because you called this so well. Shane, you called this well. Wasn't it Thursday you called it? I think it was Thursday you called it. You said, it's long. It's breaking to the upside. It's going up. I remember you saying, and we must buy. And I was like, no, you know, I've got to wait and see if it comes back here. And being cautious old me, I didn't take the trade. Well called. That was a fantastic call. It shot through. It broke through that level, and it shot to the upside. That was a really good call, Shane. You should make more of those. And you're completely wrong about do the opposite to what you say, because Look at that. That did really well. Okay. I hope you took the trade, Shane. I hope you took that trade because that was your trade and you were confident in it. I watched the Scruffy Trader and the algorithm started bombarding me with his videos, but he has some kind of spreadsheet I don't understand, so not watching him anymore. He sculpts the 5-minute time frame. Was it? I think it was Shane that sent me his links. I'm not sure. Was it you, Shane? I think so. Thank you. And I went and had a look, and I saw that spreadsheet that Kevin's talking about. And don't feel bad, Kevin. I also have no idea what that's about. I wasn't going to take the time to look into it either because it's not my thing. No, I honestly don't understand what it's about. I can't tell you. I had a look. And yes, I think he's a scalper of sorts, but he does have a strategy, it looks like. And yeah, I think his channel will kind of bombard you because he makes a lot of videos, small, quick videos, maybe not edited. So it's easy. It's easy for me to make a video that's not edited and put lots out, but I don't know if it's going to be that popular as well. So I just put the 3 out every week for you guys, and then I put the 2 live shows out extra. That's a lot of work on its own. And then I give you guys kind of the unedited, raw version of the members video every morning for the members, but that, I'm sure the members understand that it's just basically showing you what the markets are about, and if there's a cough or whatever in between, you just accept it. But yeah, I had a look. Yeah. Yeah, don't worry, Kevin. I've watched a lot of other traders that I'm sure they're pretty good at their game and they've got a lot to offer and whatnot. But sometimes I look at it and I honestly don't know myself what they're talking about. That's okay. I get it. A lot of people are into that. A lot of people are into those types of sheets and whatnot. There's another very popular guy out there who's also got some kind of system that he actually sells people, which tells you if it's going up. It gives you little bar charts and shows you if it's going up and down and stuff like that. And even that, I look at it and think, don't know. So, but for me, I'm very simple about the way I do things and very straightforward about the way I do things. So when I see things like that, it makes it complicated for me. Shane says the spreadsheets just tracks everything. Okay, yeah, I didn't look that closely, but I thought that in my head as well. It probably just tracks everything. I don't think it's got any predictive value or predictive capability. The other guy with the big channel, he's got a predictive thing. I don't know how that works. I don't know the names, Shane. Could be. I don't know how good that thing is. No idea. Never used it, never tried it. But yeah, there's a lot of stuff out there. There's a lot of good stuff out there. A lot of good information out there. Like I've said to you guys, the information is that's out there. Grab it with both arms, open arms. Don't worry about what they are, who they are. If there's good information, grab it. Use it, and use the information that's beneficial to you, that you feel is logical to you, that works for you. That's all. Everybody's got something to offer. Absolutely everyone. I don't want to talk bad about anyone, to be honest with you. They all have something decent to offer. Most people do. There's a few guys out there that, man, they just try and rip all their competition to shreds because there's other people doing the same as them, putting videos out about trading, and then they try and talk bad about them, and there's really no point to that. That's very scummy on its own. Just do your thing, and if people like it and it's good enough and they want to hear what you've got to say, that's fine. It did annoy me when people were, in the beginning, when people were shouting that you can make $1 million in a day, and that's why I started the channel. But by the same token, everyone's got something that can offer you or show you at the end of the day. And I'll say as well, just watch out for the business of I see a lot of the guys are winning every single trade, and I question that. I do question that but don't look into that. Just look into the systems and see if the system works. If you want to learn about Bollinger Bands, you can go and pick an oak that shows Bollinger Bands and watch how he trades Bollinger Bands. And maybe the next day, you'll see traders trade things slightly differently as well. Each guy's got his own idea of how to trade something. You can watch 2 or 3 different ones and see which one looks like the one that's going to work for you. So, there's that too, that possibility as well. Yes, we can tell, Shane. You do watch a lot of YouTube, but like exactly what Shane's done, he's got a hybrid system that works for him because he's taken a bit from everyone, and that's what you're looking for, is something that's going to work for you, something that's going to do the job for you at the end of the day, not just using. You can't just copy someone's system and be successful. I mean, you can't go and take, for example, Tom Hugo's system and say, I'm going to use this now and I'm going to be successful with it, because you're not him and you can't trade like him. You don't have his psychology. You don't have his brain. So you're not going to copy it. You're going to get ideas from it. You're going to get information from it, and you're going to try and implement those ideas. But there ain't no way you're going to trade exactly like that dude, because that guy's got his own way of trading, for example. And even myself, if you try and copy me to the T, you might struggle. Everybody's got his own way of thinking. You put your own rules in. Dum-dum-dum-dum. So Kevin, you are in gold. Okay, that's good. Good one. That's a really good trade. Fantastic trade. Okay. I wiped my small account going into early, so now I have to wait for my reset rules. Bummer. Yeah, I get that. Thursday. Okay. All right. That happens sometimes. That happens. These are things that happen. One of those things in life. Ellie. I must check if Ellie's here. It's 11 o'clock already from me on my side. GMT +2. And I want to go through the trends so that he understands them better. I'll start right now, right here on the Brent crude oil. And one of his questions was, should we take the trade from the higher time frame or the lower time frame? Should we trade the trend from the higher time frame or the lower time frame? Let me rephrase that question. So trade rules are important, but only 1 or 2 of them. You can break a hell of a lot of them, actually. But rules, yeah. Stick to some rules and have some basic plan. So what I was asked is, if you want to take a trade, for example, on any specific product, should we use the trend from the day, and then if you're trading on the hour, trade on the hour from the day trend or from the hour trend? So we'll just say the 4 hour to the day. And the oil, no. So the answer is this. If you go to the day, and actually Shane's right, oil, no. Oil's in a range. So, if you look at this on a day chart, you can clearly see that oil is in a range. Oil is always, 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 always in a range. Oil never leaves a range. It's a bit like the FTSE. No, but oil stays in a range, guys. If you look over time, you'll see that oil ranges between 65 and 105 on any given day. There was the bad times when it dropped to 0 or it went to 120 or 130. But generally, it sits between 65 and 105. Now, at the moment, it's sitting between 70 and 80, and that's your range. It's trading in that range. But here's where it's going to help the question, because the person asked, do I trade it on the day range, or do I trade it on the time frame I'm trading on? And the answer is you trade the trend on the time frame that you're trading on. Why? Because it's simple. Here's Brent crude oil. We all know Brent crude oil is trading in a range. So we know it's trading in a range. It's in a range. So no matter what I do on the day frame, I know I'm trading between 70 and I'm trading between 70 and 80. I know we're in a range for now. And it hasn't broken out of that range. So with that knowledge and with my support and my resistance drawn in, I'll go back to my 4-hour chart. And now I've got a trend. You see, the trend on the lower time frame is to the downside. And if I went to the hour chart, I'd have even more of a trend. I don't want to mess around with this chart too much, so I'll just stay on the 4-hour. So the trend was to the downside, and it was trending down in the range. So now we know that it's in that range because we've seen it on the day chart. So we know it's going to trade in that range. So that's kind of an advantage on your part with the technical system. With the high probability, you know that when it gets to this level, the high probability is that it's going to turn around and go the other way because you know it's in a range already. You've gone back to the 4-hour and you're in that trend. So you know when that trend reaches that price level. So you see, this all comes with experience, okay? It's not all about facts and figures. Sometimes you just got to use your experience. You know logically it's probably going to turn around there. So when it gets there, and it starts turning around and doing what you kind of expected it to do, and then it breaks through your trend resistance, which you put in on the time frame you're trading on, which is the 4-hour, it breaks through that, then you kind of logically know that, it's actually doing what it normally does, and it's breaking to the upside. And now the trend has changed to the upside. So now all you're waiting to see is if it breaks the trend to the downside on the 4-hour chart. And how do you do that? You can take it and you can draw another line in. This one's already broken, so there's no point in drawing another one in. There's too many lines otherwise. You can actually just say, okay, hang on, let's see. What can we draw in here? What can we put in here that looks like it might be worth something? You kind of need 3 points, which is why I'm drawing it in here. And that will make me happy. So even though there's a slight breakthrough over here, that's fine. There's 1, 2, 3 good touches there. So that's kind of like your trend. And you see the confluence is right here in this area. And now if you take it back to the candles, you can see there's a few breakthroughs in the line. But now what you want is for it to stay above the support line, because now you've drawn in a support, because now you've got a trend to the upside. But you and I both know that this is in a range on the day. So what we're waiting for is for it to get up to the 78, maybe get up to the 80. That's what we're waiting for. So we know that that trend should continue on to the upside. But if it should break to the downside and clean break and retest and go, you'll need your stop loss in place and it'll turn around and go the other way. In this case, it has broken through a supply level to the upside. So it's taken that money away and it's gone. There's no more money here. That money is now gone. So what you can actually do is remove this now because you don't need it anymore. It's broken through that. It's broken away from that. Now you've got your trend support in on the oil and you know that you want to stay above that level. That's how you trade. If it breaks through that, it's going the other way. You want to get up. That's as simple as it gets. Okay. Okay, on my chart, oil has pulled back on the weekly golden zone. Weekly, I'm going to put Brent in here, take this out the way. I'm just going to have a look here at the weekly chart on Brent crude oil. So what I'm seeing on Brent crude oil on a weekly chart is that it's clearly broken through trend resistance. to the upside. It's bounced off the support clear to the upside, and there's a clear candle running to the upside. So that's pretty good. I'm quite happy with that, actually. Not too bad at all. Let's just have a look at what we've got here. We can draw a small fib in. If you want to draw Fibonacci retracements in, the small fib is coming up to the 50. And on the small fib, yeah, 77.50, which is really not bad. Look here, guys, 77.50, 78. Now, oops. If you look at that, 77.50, 78 is where your fib is, right? So what I'm going to do, I'm going to quickly go back to the 4 hour and show you a line here. Guess where it is? 77.50, 78. And I did say, if the price gets to this level, we've got to start looking at it, because it does seem to be quite happy to bounce back down off this level. It doesn't seem to want to get above there. So I know about that level. That level is already drawn in there. So even though we know that it ranges between 80 and 70, we know there's a level in here, 77.50, that could knock it back. And if I look at the fib on the weekly, this is the weekly, no, this is the daily. The weekly, then the fib definitely tells us, as Shane says, on the short term, that it's heading into the golden zone. But 61.8 is where you need to get to, generally. So, and if it gets to that, 77.50, she's on the nose, man. She's on the nose. Now, if you want to go the whole hog, the whole way, then you could look at, on the weekly, the bigger picture, which takes us all the way up to the 85 or the 80 level at the top. So you've got that your secondary level, effectively. So you've got your first level, and you've got your second level. And that's Brent in a nutshell. That's Brent on the technical analysis. And as you know, it's 50-50. Technical analysis is not 100%. But there you go. Confluence. My level here at 77.50 is exactly the same as Shane's fib on the weekly. Amazing, isn't it? Absolutely incredible how that works out. So that's why I say fib is actually a good product to work with if you know how to work with it, and you understand the golden zones and things like that. There's nothing wrong with using fib. You know why I don't use fib? There's too many lines. Just I don't like too much on my chart, so I just leave it out. And I found that drawing my support and resistance lines in, oddly enough, 8 times out of 10, it lines up with fib. Can you believe it? It's insane, actually, how that works. How fib actually works that out is quite crazy if you think about it. Because that's not even traders. You know, like I always tell you guys, you're trading with traders, you're looking for liquidity in the markets and whatnot. And all of those traders aren't working on fib, and they somehow ended up at that exact level. Numbers are a funny thing, eh? Numbers are a very funny thing when you think about it. It's crazy, eh? Absolutely crazy. But yeah, it works. Yeah, Kevin, we were in and what did we do? Yeah, we were in at the 71, and then it got taken out at 73 odd. Okay, and we took that profit. It broke through that supply level. Then we took another trade now, 73.94, with a view to it going up. So we lost that one in between. But we're back in again, and it's going up. So it's a continuation trade, effectively. So it's not too bad, actually. Not too bad. Brent's kind of treating us well this week. It's kind of treating us a bit better. That's interesting, actually. Surprisingly enough, Brent's treating us a little bit better this week. What's not treating us well at the moment is the US 500 trade, but I think that will bounce as well. If you take the US 500 to the weekly, shall we go and have a look? US 500 on the weekly. suppose a bit more data would be nice. But if I look at the US 500, this generally looks like we should get up to 61 again, based on the weekly. But it is in the support. Let's see what happens. Okay, I don't think Ellie's here today, and I've just answered his whole question. Maybe he'll watch the repeat, and that will sort his issues out. The Sunday night thing. You see, what you'll figure out, Kevin, is when you do hold a trade over the weekend, Sundays can be a bit of a nightmare because you're always worried about Monday morning. How's it going to open? You know, when I was trading when I was younger, and I hadn't quite got over the psychology, let's say, yet. I was still quite raw to the psychology. You know, if I had an Australian dollar or a New Zealand dollar or a yen or something open on a trade, I would literally get up at 2 o'clock in the morning and check the trades. Get my phone out and check what the price was. It's insane. Absolutely crazy. And that, especially on a Sunday. And that was when I decided that day trading was a bad idea. Let's go for swing or position trading, as we call it. Let's slow it down a bit, and let's not let's not continue on down that disastrous road, which will just give you a heart attack at the end of the day. So be very careful of getting caught up in that as well, especially if you've overtraded and you've put an amount in. I tell you what, the amount of nights that I would wake up at 2 or 3 o'clock in the morning and be looking and just to see how much it was and where it was going and that. And it took a lot of years for me to get over that, that stress of that scenario, because you guys know that when news comes out on Forex, I mean, these lines can move hectically. And yeah, always. So the random channel, I think that's Greg. What do you think about trading in the 15 minutes or the 30-minute charts? And that's an excellent question, because that's actually what I was just talking about now, because I traded there for years. And my personal feeling on it is I don't like it anymore because I have to sit and watch the charts. You might think you're only going to watch the charts for 2 hours, like all these guys on YouTube show you, but that's not the reality. The reality is you switch it on, trading on 5-minute or 15-minute or 30-minute charts. You switch it on and you're sitting waiting for those trades, you're watching for those trades, and then you take that trade and then you get out of that trade and you get the next one and so on. You don't walk away after 2 hours. You sit on that computer all day looking for trades, all day. And especially if you lose one or two, because the immediate psychology is to get it back. So my big thing with trading on the higher time frames is take a position, put a position in, leave it and let it ride. Come back later, check it out, don't stress about it. That's why I trade 4 hours a day more than any other reason. Pretty capable of trading this lower time frames, 5 minutes, 15 minutes. I can do it. It's not a problem. Here's the problem, though, that you will face, that everyone will face. On the 5 and 15 minute particularly, and 1 minute, it's been proven over and over again, factually, with tests, putting pro traders in the room, but 99% of traders lose, or just about break even, but generally lose. Only 1% of traders have got the psychology on those time frames to actually win. And that's the difficulty, because you're up against some tough competition. So that's the difficulty of those lower time frames. 30-minute not too bad, more like the hour. From the hour up, I would say you're pretty safe. From the hour down, you're starting to look for trouble. I'm not sure what the statistic is on the 30-minute. I just know that the 5-minute, 15-minute, and 1 minute, that's been proven over and over again to be very dicey. But it's not that difficult to trade. What's difficult, it's actually easy to trade it. What's difficult is the risk management and being able to manage it correctly, because it's easy to scalp 10 trades and quickly win. It's not easy to take that loss. And that loss can wipe out all the work you've done in the first 9 or 10 trades. That's what I found many times. You'd work really hard at building that account, building that account, building that account, building that account. And you're getting really excited about it, and you're getting really happy about it because you're good at this. You're making money. You profit. Because normally when you take the trade, it goes in your favor. You take the profit, that goes in your favor. You take the profit. And then that one gives you a big red line, a big nasty red line down. And that big red line happens fast on a 5-minute chart, believe me, or a 15-minute chart, 1-minute chart. That red line doesn't happen slowly. It happens quick. Especially on Forex. It happens insanely fast, especially if someone says something you don't know about it. It actually moves at that speed. Now it's too late to get out because you didn't have an automated stop loss, and it's too late to get out. All of that profit you've made in the last 10 trades has already been wiped out in 3 seconds. 3 seconds flat. Boof. It's gone. And now there's a psychological problem here. What do? Do you jump ship immediately, and then it goes all the way back up, and then you get back in, and then it goes down again, and it takes even more money? What do? That's the problem with these lower time frames. That's why the oaks get caught out. They don't get caught out because they don't know how to trade. They don't get caught out because they don't know how to trade a system. They get caught out because of the strategy and the psychology behind it. And they get caught out because it moves really quickly sometimes. And when it does, it catches you out. It's almost like being in normal position trading and picking up a crash. And it's too quick for you to get out. And then you're already in the loss. And do I stay in the loss and hope for it to come back? Or do I just keep on taking a loss? Or do I jump ship? And you've got to think really quickly in those scenarios as well. So, Greg, I've actually thought about the live coaching or a WhatsApp group or something like that where people have direct connection to me, okay? Or where I take the time to go that route. Because you have to remember that I'm trading and I'm doing this YouTube on the side. It keeps me busy because, to be perfectly honest with you guys, when I was bored trading in the past, I'd literally sometimes even just play games or something to keep myself busy because trading is boring, right? There's not that much to it. It's quite easy. Sometimes I'd find myself dropping to the 5-minute time frames just to keep myself busy. So now I have a YouTube channel that keeps me busy, keeps me out of trouble. Now I enjoy it and it's fun, but I have to be careful of drawing the line between making it full-time and it's part-time and I'm helping people and enjoying myself. Okay, so I've got to be careful of that. So I have thought about these things. And I've also thought about how it's going to take time out of my day, what it's going to cost me, and these sorts of scenarios. Because, like I said, even with the WhatsApp group, I don't want to be sitting around with my buddies having a frosty and my phone is going insane. So I think if I go down that road, which I might not, but if I do go down that road, it'll probably form part of the membership somehow, maybe a higher level of membership or something to that effect, but I'll have a look at that to make it worth my while, because there'll be a lot of people that will just drive me crazy and because I'm doing it for nothing or whatever the case. So I'll have to look around it and see if it's worth my while doing it. Should I do it? Should I, take the time out to do these things? Because, there's a lot expected from coaching and stuff like that, and I really didn't want to start any kind of course or do any kind of special courses or anything to that effect. That's not where I wanted to take the journey. So I have to really there's been a few requests, so I have to think about it, and I have to think about how I would go about it in such a way that it doesn't affect either of us at the end of the day. We all benefit somewhere down the line. Okay. So yeah, Shane says I'd be in there, of course. Okay. That's great. And you know, the thing is, Shane, the only reason I would even put a cost on it is to limit it to people that are really interested, so that I know that when I'm putting my time out on that I'm not wasting my time on people that are just messing me around. Okay, so that's why I would probably initiate a cost on it, but I have to think about it, like I say, Shane. So don't all get your hopes up. I'll have to think about it carefully, because I also did, you know, I never wanted to really start any paying courses or anything to that effect. And the only reason I have the membership scenario as well is for that exact reason, where I just want it to be, you know, that I'm dealing with people that are serious, that are interested, and that's what it's there for. It's not even an expensive membership. It's cheap. It's just I wanted to sort of that commitment, because otherwise you're just putting yourself out there. People take advantage, and I get it. I do get it, and I don't mind, but I've got to keep the limitations, particularly when it gets to personal levels like Zooms and WhatsApps and things like that. So I'm thinking about it, but I'm thinking about how I'm going to take that journey with you guys. Okay. I'll have a look for you, Kevin, on the platinum. And Greg asked, is it helpful? What do you think of the fixed volume profile? Volume is always helpful, but just normal volume. But you must understand that all you're looking for in volume is if it's a real move or it's not a real move. So what I mean by that is, if you have a lot of volume and the price moves, then it's a valid move. But if the price moves on very small volume, then it's not a valid move. And that's kind of what you use volume for. If you're going to use volume, that's all you need volume for. So don't get caught up in all these fancy indicators. They're just going to lead you astray. You're going to change your system every 5 minutes. And like I always tell you guys, watch out for that. Don't change your system every 5 minutes. It's truly just going to mess you around. Seriously, guys, don't mess around. Okay. On FIB, for me, it has, correct. Sorry, platinum. I'll have a look. Yeah, volume's very good in stock trading. It's actually, forget about volume in Forex. Sorry, random. Yeah, I forget about volume in Forex. Don't use volume in Forex. You're wasting your time. Don't go there. Volume is for stocks. Okay, sorry, I actually didn't mention that now. Volume is for stocks. It's for shares. You can use it in indexes, because indexes are effectively shares. Okay, so use volume. Don't use it in crypto either. You're wasting your time. Volume is for shares. That's it. Okay, that's volume traded, and that's what you're looking for. So when you're using volume, don't use it for anything other than shares or indexes. It's not trading advice, just information. Platinum. Gosh, I haven't actually looked at platinum. Let's just see. Do I have platinum on this platform? Energies. Tell you what I'm going to do. Actually going to go I'm going to have a look at it on the other side. Dum, 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 dum. I'm just having a look at it on my other charts because this thing, I don't know. Just have a look quickly and then I'll tell you what I think. I don't trade platinum in general. Okay, when I see platinum, what time frame is this? Oh no, I can't trade it. That. On the 4 hour. Looking at this, looks like platinum's still got a bit to go on this. Let me just do another check here. I think your support's maybe a little bit lower. I see you. Let me just see here. Okay. Kevin, platinum doesn't seem to have hit support yet on my charts. On the 4 hour. Mine's showing more like 970 or something like that. So maybe even lower. Yeah, 970, somewhere there. Okay. Needs to go a little bit lower before it hits support. And there's a trend support, yeah, 970, a bit lower. Okay. According to that, what I see there. Right, then I hope your platinum is the same as mine. I didn't put the chart up here. I just looked on my other charts. Okay. Random channel I saw on YouTube. Fixed volume profile. Another question. I know I ask you many times, but seriously, can you make a living from day trading or side hustle? It's a support resistant area. Platinum is making head and shoulders 1 hour. Platinum's making head and shoulders on the 1 hour. Let's have a look. 1 hour. Interesting that you guys say that. Have a look at this. No. No, not seeing it. Not seeing the head and shoulders either on platinum. Okay. Jesus. If it's making a head and shoulders, it's like, it'll take a while to get there. Nope. Like that. There's a way to go before it gets to support. No, support's much further down. Okay, I've had a look at platinum now. It's a long way to go before platinum hits its thing. And then another question, and I ask you many times, but seriously, can you make a living from day trading or side hustle? I think it's ranging. Okay, so the question of can you make a living from day trading is very neither here nor there. If you've got $100 in your pocket and you want to make a living from day trading, rather run and go and get a job. You're not going to make a living. If you've got $100,000 in your pocket and you're a competent trader, yes, you can make a living from day trading. So what I advise most people that don't have much of an option is get a funded account like this one. I did leave a link for those who need it. Go and get yourself a funded trader account for a couple $100. There's instant funding now as well. And if you lose a couple, that's fine. If you make a profit, get the money out and use it. But you're going to need a decent size account to make real money. That's the thing. You know, a lot of people try to make money with a couple of $1,000 because they've watched a few YouTube videos that have said you can turn $2,000 into $1 million. And because somebody else did it doesn't mean necessarily that you're going to do it. And you've got to keep in mind that to do that, you've got to be fairly lucky, or you've got to be fairly competent. Now, I don't say that those people are just lucky, but yeah, it's not that simple. For example, if I have a $2,000 account here and I stumble across Bitcoin and I buy it and it suddenly shoots up to 150,000, then I can clearly boast to you that I made, I don't know, $2,000 into $100,000. And it'll look great. It'll make me look great. But effectively, that's not what the market's about. The market is a tough place. And if you're going to make a living out of the market, you're not going to do it with small money. So if you don't have big money, then you need to get yourself funded accounts, prop firm accounts, and then use that money, take the profits out, put it aside, and maybe try and create your own cash account or whatever the case, because your risk is much less as well. But you know, making real money is about having real money to invest with, and it also depends relatively how much you need. So, for example, on any given year, on average, on trading, I take about 25%. I actually take more on my investments. So if I add my investments in, my income's a lot better. But if I just take trading, you get bad years, you get good years, and on average, you're going to make about 25%. Now, 25% of what? That's what you've got to work out. You know, 25% of $1,000 is not really a lot. I don't know if you can live on that for a year. Whereas 25% of $100,000, maybe you can make it. It's tight, but, you know, it's not a lot. So that's why I say it's relative. And it's relative to the person who's trading. So yes, you can, obviously, make a living out of trading. But to do so, you've got to have the asset value to do it. If you go and start a business on the high street or down the road, you don't do it with no money. You don't have no money to do it. You've got either investors, or you've got cash, or you've got a loan, or you've got something to open that shop with, because you need stock, you need staff, you need counters, you need tools, you need all kinds of things to open that business. You don't open the business with $100. Trading is the same. You don't open this business with no money. So what I normally recommend to friends that are working and they want to get into the markets is I say your best bet is actually to invest time in the market. Just pick a few shares and put money in the market every month and invest in those shares and watch them grow. You'll be a lot happier and a lot less stressed. I trade because it's fun. I trade because I enjoy it. I don't trade for the money. I invest for the money. I trade for the fun. I enjoy trading. Trading is a bit of fun. I enjoy the, how can I put it, the challenge of winning a trade, the challenge of it's like playing chess or any game. It's like a game to me. I enjoy it. It's fun. So I don't do the trading bit to chase the money. So that's where a lot of people go wrong, is because if you're chasing the money, it's going to become a chore. It's going to become horrible. It's going to become annoying. It's going to stress you out. You're not going to sleep at nights. And that's where it goes insanely wrong. In the beginning, I'll admit I chased it for the money, but you know, that was my mistake. And then I would try and leave it, and then I'd end up going back to it. And then I realized, it's not for the money. It's because you enjoy doing it. So, but then you have to do it full time. You can't be working and trading. It's really difficult. You can do position trading as a side hustle. You can position trade. So you can, for example, choose your trades in the morning, go to work, and during the day check on your phone, whatever the case. But yeah, it's more of a permanent thing. Yes, you can obviously make a living from trading, but as I always tell you, it's relative to who you are, what you need, how much you've got. You ain't gonna turn this into a living with $100 unless you somehow stumble on quite a bit of luck. Now, there is a way to do it. There is a way to do it if you are a very lucky person. And that is if you take $1,000 and you take gear trading 100 to 1 or 500 to 1, whichever you prefer, and you win 10 trades in a row, doubling up every single trade. Bearing in mind here by your 6th, 7th trade, you probably doubling up on $500,000, then you can do it. But you're going to have to win 10 trades in a row. And also, when you lose the one with the big money, you're going to be able to have to take that in your stride. I had it in my hands and I let it all go. Most people ain't going to get that right. Even if they're brilliant, they ain't going to get that right. Yeah, you know, when you say you always thought trading is a scam, trading's never a scam. It's just the people that try to tell you that you're going to make millions that's a scam. But if you understand that it's a real thing, and you understand that it's real and you're investing, and that there's real people behind it and human beings, and it's not just lines and stuff, then you'll pick up that it's not actually, this is not a scam. This is the real stuff, you know? It's real stuff, real money. Yeah, Kevin, on the funded account, you have to be profitable or be out very quick. But, you know, when I always talk about these funded accounts, what I'll say is I was never for them. I was always against them. And then I learned more about them, and then I understood what it's about. I understood that there are people out there that can't afford to take cash and just throw it at the market. That's a great way to enter the market for a very small amount of money. I don't say trust them. I don't say trust any of them. All I say is get your money out as soon as you can if you make a profit. That's all you want to do. And just take your profits. That's all I say. Just take your profits as soon as you can. Don't leave your money lying there. Even with a normal cash account, don't leave your money lying with them. You never know when they're going to disappear. Banks are more regulated if you want to keep cash. So if you've got any cash lying around, any profit lying around, get it out of there. Like I said to you guys before, I saw guys complaining on YouTube about prop firms stealing $100,000 from them and they disappeared and blah, blah, blah. And I was like, who in their right mind that's not insane would leave $100,000 with a funded account or a prop firm? I mean, who would do that? That's insane. I mean, if I make $1,000 profit on anything, I'm like, give me my profit. I want it in my bank account. It's not staying in yours. That's for sure. Probably because I'm Scottish in the long run, but man, it just begs the question: who would do that? You know, who would do that? So either they're talking SH1T, or they really did lose $100,000 and they're just stupid. I just don't know, but either way, you get what I'm saying. Yeah, that it's not. It doesn't make sense. So maybe it was just hype to make a cool video. I don't know. I don't know. Jane, you're quite correct. The cash accounts are far better because the profits go straight into your account. And like I say, I was always against these prop firms until I just realized that there are people that really need them. And it came in useful for us here as well. It's a bit of fun, you know, a bit of fun. Looking into 15-minute breakout, what do you think about Frederick, I'm looking into orb 15-minute breakout. What do you think about orb strategy? I'm going to be straight up with you, Frederick. I don't know orb strategy. I know breakouts. I know what I've taught you guys what breakouts are and break and retest and that sort of thing. That's standard stuff. I don't know anything about orb strategy, whatever that is. Sorry, you'd have to explain it to me. How do you know if Orobi is false breakout? Guys, explain to me what you mean by orb. It's another terminology or abbreviation or some system that means nothing to me. Orb. Opening range breakouts. Okay. That makes more sense to me now, Shane. Opening range breakouts. Okay. Those are something that a lot of traders, I would say 5-minute traders, would use. An opening range. They've got names for sweeping the account, sweeping the money. It's a bit like the trade opens and it shoots up and it goes past the last high or the last low, sweeps the money, and it goes back out, breaks out, and you take the trade. It's very weak analysis, but some guys have done a lot of research on their trading as to whether it'll work or not on certain instruments and what have you, and it kind of works for them. And like I say, every system works. It's just a question of how it works, and it's a question of how you've applied the system at the end of the day. So you look at it and you think, this works for me. Like I said to you, if you've got no lines on the chart whatsoever and you pick an area and that's how you choose your trades, that's your system and it works for you because the market's 50-50. So it just makes that person feel more comfortable that that's how it works for them, because it happened. Human beings are creatures of habit. So it happened in the past, so it'll probably happen in the future, and that's how you look at it. Yeah. Yeah. First 15-minute breakout. I get it. You know, no, it's like I say, all the systems work. But what I would say, I mean, like Shane says, yeah, gaps will demonstrate the issues. Gaps are the same sort of thing. It's a good example, actually. The 15-minute breakout, you kind of can use it as confluence if you're thinking of taking a certain trade based on proper maybe price action, and you see that there's a possibility that the trade's going to go that way, and you get your 15-minute breakout and you think, oh, it's going in that direction, it'll give you some confluence. But to actually trade on that alone, I don't know. It might work for some. I don't know. I've never used it. It's not something that I want to use. Yeah. Pivot points, those are probably better. Yeah. You know, it's everybody's got their own thing. It's like I say, that first 15 minutes of trading. So the first 15 minutes of trading, what you'll find often is, I wonder if I can find let's go here. What you'll find, I can't really see, but that first 15 minutes of trading, it opens and then it sweeps down past the low of yesterday, and then it sweeps up, takes the high. It normally turns around and goes the other way, sweeps up, goes the high, sweeps the market, takes the money and goes. That's another system that's well used in the market. Then you get the you know, like you say, it's a false breakout. So, you know, that happens quite often in the market. So if you want to use it, but I wouldn't use it as a system. I'd say, for example, here's a 5-minute chart. Let's say this was opening. What I would do is say, okay, on price action, here's a level, and on that level, I might get this price coming back into it and going. And effectively what it's doing is it's sweeping this price out, taking the money and then going up. It's just the way the market opens. It opens and it heads in that direction and then it goes. But if it carries on going that way, then it's broken in that direction. So I would just stick to simple price action or simple trend lines, simple fib. You know, don't overcomplicate it with these things. If you want to trade with something like open range breakouts or sweeps or things like that, you really have to research the instrument that you're trading on. You're going to have to go back a few weeks and see what it does every opening for yourself. Do your own homework. You're going to have to do your homework. You have to go back, see what happens every time this instrument opens. What does it do? And then go back on that and follow it and then understand how it works. Don't rely on somebody else's information. It's not just a general system. It's something you actually have to do homework on and figure out if it's going to work on that particular product. I'm sure it works. Every system works. I'm just pointing out, just so as you know, it ain't that simple. So, for example, in the US 500, I could say here, let me draw this in, let this come down here, let me take money and buy long, and it will go up in all likelihood on a 5-minute chart. Yeah. Or a 15-minute chart. Do we have a 15-minute chart? Yeah, we do. 15-minute chart. Pretty much what you're waiting for to come down here, break down. Yeah, it happens. It works. Not a system that I use. Aha! Shane is making a suggestion. Long on DAX. Let's go and have a look at the DAX. Ha ha ha! The DAX. Are we on the 4-hour? We are on the 4-hour. Let's have a look at the DAX. I love the DAX, Shane. I love the DAX. DAX is a wonderful trade. Start. Do you think that knowing how to lose is the way to win? Dude, understanding loss and being a good loser is the only way that you're going to win. It's our strategy. It's our cemented stone, Rob logical trading strategy. Go and watch all the videos and you'll see that strategy at the end of every single video. Manage your risk, learn how to lose, make more on your profits, and you'll be okay. But if you don't know me, go and watch the videos. That's our solid stone strategy. Learn to lose. Okay, anyway, the DAX. Well, firstly, let's take it to the day chart, and let's put it on a line chart and see what we've got. Okay, there we go. I love the DAX. DAX has always been a good to me. Yeah, so what we've got here, it's quite a long uptrend. Nothing much to the side, apart from maybe these levels here. This is where Shane's fib comes in handy. When you don't have a nice level, you can just go and have a look here, see what you got. Boom. Might be a nicer long if it was to get down to 210. I'm just having a look, Shane. Just having a look. Just want to see. Okay. And then we've got a bit of sort of resistance up there. This wants to drive me nuts. First thing I'm going to do is give it a bit of all that. Okay. Change that. Then just draw that in there. Okay, that's the DAX. Let's go back down to the 4-hour and see what we've got. Not a lot, really. Not a lot. Not a lot. You do have a bit of support on the 4-hour here. Do we have this on the day? The support. Yeah, we do. Kind of. Yeah, we do. So let's have a look, shall we? And then we can take it back, and we can take it back to the candles, and let's go and have a look. So I guess, Shane, in your opinion, this is ranging at the moment, so you're looking for that trade between 224 and 234 for a long trade to the upside. Yeah, not bad. Not a bad thought for the day. Worth a look. Definitely worth a look. Okay. Is there anything else in here that's going to prevent you from going up? Just looking at that sort of level there, not much going on there. I think you can basically take that straight in a range with a view to it going up to 232, maybe wait for the green candle, eh? It's not a bad trade, actually. Not a bad trade. How's it on the H1? See, on your H1, on your 1 hour, yeah, you're kind of waiting for that green candle there. You could wait for it on the 1 hour as well, just to see if it gives you a sniper entry there on the 1 hour. And doesn't look too bad. Sorry, that was a 30-minute. Wow. Okay, yeah. So, looking at the daily for the DAX, plus my 21 EMA. Okay. Sure, I'll talk a little bit more about our strategy. That's fine. I'll do that now. Absolutely. I'm looking at the daily rob for the DAX plus my 21 EMA. Yeah, even on the 4 hour showing, it's looking good there. It's looking pretty good. It's looking pretty good even on that. That's not bad for a long. And you know what, Shane? We're going to take your long. It's okay. If we lose, it's your fault. It's all right. We're going to take your long. We're going to take a lot less lots than that, though. Oh, we only want to lose $250. We don't want to lose, what is it? 2,000 bucks. 257. That sounds fair, right, guys? 257. Oh, mind you, I must put the stop loss in place. Where are we putting the stop loss, Shane? We've got to put the stop loss somewhere. 221. Hey, 221. Come on. Stop loss 221. 221. Yep, 221. All right. Wow, that's like not allowing me much to buy, is it? Okay, let's try that. Jeez, I tell you, can't buy a lot of lots here, can we? Okay, $200. That's fine. There we go. And then take profit. Take profit at 233. Yeah, just to be on the safe side. 233. That gives us 451 profit. And let's buy it. Let's put it on our system. Kevin, we're doing a Shane trade. Haha, here we go. Shane trade in. Love it. We've got a Shane trade in. Germany 30. Done. Yeah, look how his gold trade went, dude, and it did well for you as well. Shane, 222, 22251, 22251, 22251. Is that our stop loss? Stop loss. Well, I'll put the stop loss at 221. Okay, so I've given you a gap. I've given you a good gap there. So, I mean, yours is going to get taken out at 222. Ours is going to get taken out at 211, 221. So you're still in a good place. If it gets to 222, we'll have a look at it. But if it goes up from here, 233, that's the take profit. Is that okay? 233. Hopefully, that'll make a decent profit for the team. All the pressure's on Shane. Love it. Love it. Okay. Kevin's worried now. Yeah, well, you know. It could all go pear-shaped. And if it does, we'll have to start again. Damn. Yeah, no. What I try and do with the stop losses, guys, is I try and keep them kind of away from the money, sort of below the the support. Now, this is actually too close as well because of these dot bottoms here, but it's okay. But what I try and do is just keep them out of the money. That's all. And then it gives you some gap, because you must remember the other traders are looking for your order. Let's cross our fingers and hope for the best. And hopefully Shane's trade makes the profit. That'll be great. We should have traded gold with Shane the other day. See, we would have done well. But okay, let's see how this goes. And we'll take it from there. Look, it is, you know, anything can happen here. It could sort of fall back down, whatever the case. But it's on the support and it's in a range, so it could continue on to the upside. And that's what we're looking for at the end of the day. And if it goes well, it goes well. No big deal. We'll see what happens in the long term. Now, talk a bit more about the strategy. The strategy is as simple as what we did here. We took a trade. What did we do first? So just North Star asked for us to go over the strategy a little bit. So I'm going to do that so that the picture's out there. We have to go over the strategy so everyone understands it. What the first thing we did, we looked at the stop loss, we looked at the risk, we looked at the invalidation area. The reason we chose that area, I chose that area, we chose that area, is not because we want a tight stop, but because we want a stop loss that if the price gets to that area, the trade becomes invalid. And then what we did is we looked at how many contracts can we take that will give us a situation where we'll only lose $250 if we're in that trade. So that we're not going to lose more than $250. And then all I did is I worked that stop loss back to figure out that we can take 0.02 lots to risk $200. Okay, that gives us a risk of $200. That's the first thing we work out. Now we've worked out the size of the trade, and then we work out where our take profit is, and our take profit is in the resistance area. So we put our take profit up there. Risk to reward, the risk to reward is fair. So now that's the start of the strategy. But the main thing with the strategy is to risk the same amount of money on every single trade. So every trade has a $200 to $250 to $260 loss within that range. That is 1% of your account. And the reason we take that risk that way is so that we control the risk. We control the risk. We know that if we lose 10 trades, we lose 10% of our account. We know that every trade we lose $250. What we're trying to do is we're trying to win $400 or $500 on the wins. Because the high probability of trading is that for every 10 trades that you take, you'll most likely lose 5 and win 5. That's our strategy. So the first thing that we look at when we take any trade is what will our loss be? Where will our stop loss be? Where will our risk be? That determines the size of your trade. And every single trade that you take needs to have the same loss amount. And the reason for that is if you don't, then every single trade is a mishmash of how much profit or loss you're going to make because you don't know. You don't have a plan. Doesn't matter if you feel better about one instrument over another. If you like trading gold more than you like trading the S&P 500 or the euro US dollar, so you're going to risk more on those. No, because the one you risk more on is the one you're going to lose on. Always the case. So risk the same amount on every single trade. Now, I don't say you have to risk 1% on every single trade. You can risk 10% on every single trade if you want to, as long as you keep it constant and you keep it the same. Now you know that every single trade you lose, you're going to lose $250 or less. Because sometimes I get out early if I see a trade failing. Sometimes the trailing stop takes it out, whatever the case. So you're going to lose $250 or less on every single losing trade. Now what you want to do is leave it to run for the winning trade. When it gets up to a reasonable win, a couple $100 in, you want to move the stop loss up to cost. You want to put a trailing stop on it. Maybe you want to move it into a slight profit and let it follow the win up all the way to the winning point. When it gets to the take profit, you want to take your stop loss, move it right up behind it. So if it comes back and takes it out, you make the money at the end of the day. If it carries on going north, the trailing stop just follows it north and you make more money. That's as simple as the strategy gets. The strategy is not complicated. It's not overcomplicated. It's not something unusual or out of the ordinary or weird or anything like that. Or I'm not expecting you to wait for the moon to turn into green cheese and move 5 degrees to the left before you take or lose a trade or whatever the case. Losing is the most important part of your trading. You have to understand that you're going to lose trades. You are going to lose trades. We just took a trade on the Germany 30 for Shane, and we're losing at the moment. Do we panic? No, we have a plan. Our plan is we have a stop loss, and the stop loss, well, it's moved up a bit now. It's 197, but it was around 200 odd. And the plan is that if it hits that stop loss, we let it take it. We don't move the stop loss. We've made a decision that that's where the stop loss is. So we're not going to move it away. When it goes into a loss, we're not going to dollar cost average down and lose more money. We're just going to accept that we're losing. Because when we're losing, we don't want to do anything with the trade. I don't want to swear, okay? It's one of those, okay? But when we're winning, that's when we get excited. And here's the problem for you in the strategy is if you're $200 in or you're $100 into this trade, sorry, I get confused with the other accounts, right? This account is $250, smaller account, sorry. Okay, so it goes into a small profit of $50 or $100 and your finger's on the button because you want to trade out, you want to take the profit. Let's say this one, Euro US dollar, $90 in profit, and your finger's on that cross. You want to take that profit because you've got a profit. But you must not take that profit. You must leave it and let it run. There are many cases where it's going to go back, take out your stop or your trailing stop or whatever, and it's going to drive you insane. In fact, most of our trades get taken out by the trailing stop. But I always say, if you make $100 on a trailing stop, you would have made that scalping anyway. But if you leave the trade and it actually makes you 400 or 500, you only need a couple of trades out of the 10 to make that, and you've cleared the way. So that's how we trade. That's as simple as it gets. Not complicated. I hope the strategy kind of gets over, but go and watch the videos, and the end of my videos always has the strategy, the last 10 minutes, right? And because that is the most important part of trading. But if I put it at the front of my videos, and this is my psychology behind it, nobody listens. If I put it at the front of my videos, people go, rubbish. They want to see the system. So that's why I always go through the system first. And then I move to the strategy, because the strategy is got to sink in. And the strategy is there for people that are dedicated to actually getting to it and learning it. That's why I also put it at the back of the videos, because it's not for everyone. It's for those people that really want to get there, that really want to figure out how this works. It's not for everyone. Not everyone agrees with it either. Many will think that it's not psychology. Many will think that the system will make them money. Many will think that a win rate will make them money. You and I both know that win rates don't make you money. Systems don't make you money. The market is more subjective than anyone will ever believe. Okay. So you need to be strict on the rules. You don't have to be strict on the rules. You have to be strict on the plan. The rule of risk 1% on your account, you can move around and change around as you please, but you must keep it the same. The strict rule is keep it the same. It doesn't have to be, if you're risking $250 per trade, that it has to be $250 on the nose. It can be $200, it can be $270, it can be $220. Within that region, within that ballpark. So that rule is a little bit flexible, but not big. It's sort of a little bit flexible. But as far as the rule of risking the same on every trade, that one is stringent. That's the stringent rule. You can move your profit levels around. You can play around with how you move your stop loss. You can play around with how you take your profits. Just Don't take your profits early. Don't dollar cost average, strict rule. And don't move your stop loss away, strict rule. Those rules you've got to stick to. Kevin says every single trade Shane takes goes against him. Do you know what? This is absolutely perfectly normal to take a trade and then it moves against you and then it goes with you. That happens on so many occasions to so many traders. Don't worry, it's not just Shane. Okay, so Northstar says so simple. It's my losing correctly that I've been looking to fix, and you definitely strike a chord with, yeah, okay. Shane wants to short the FTSE. Okay, so we've gone long on the DAX. Why are we shorting the FTSE? Let's have a look. Shane, on this one, yeah, I think I'd maybe go against your trade here. Okay, what the FTSE is doing is it's in a range, and it's just sitting in that range, and it's kind of doing nothing. Ooh, this time, Shane, no, we're not going to short it. There's nothing going on here. There's just nothing going on. It's not something worthwhile even considering. I'd wait for it to get up here, then short it, or wait for it to get down here and go long. There isn't even a good trend on this. It's sad, really. It's quite sad. There is a bit of a sort of line here, but not much to write home about. I'm not seeing much on the FTSE, and I don't really want to go long on the FTSE when I'm short on the DAX. You know, it's neither here nor there. This is just going. But the thing with this range is it's going sideways, but going nowhere. It's not giving you that sort of thing that you need. For example, if we trade in a range, what are we looking for, guys? We're looking for something a little bit more. Hang on, let me just change this color so that you can see what's going on here. Okay. What we're looking for is something a bit more like that. Okay. We're looking for that sort of up-down scenario in a range where you're kind of making some money, maybe it breaks out or whatever the case. So you're kind of looking at that scenario. And what you've got here is this is just flat. It's doing nothing. It's not going to make you, there's no risk reward, or there's no reward here, let's say. There's not much movement. It's just dead. Maybe if you're trading on a 30-second account or something, you might make some money off here. If I was going to go short, I'd go short to the 85.50, but what I would actually do is go long from the 85.50 and go up. Because what you're going to get here is very much a, let me show you quickly, on the FTSE. You're probably, you know, these things, you're probably going to pick up that level there. You're going to pick up this kind of strange, interesting, wonderful level here and out. Maybe. That's kind of what I'm looking at. So yeah, keep that in mind. But yep, we'll stay with your Germany 30. That's a wonderful trade. Do not trade the FTSE. I'm in the UK and there's nothing positive about the UK just now. I'm looking at my candles, H4 and 21 and 50 MA of the UK. Okay. There's good places in the UK and there's bad places in the UK, I guess, just like anywhere else. Okay, Ellie, I can see that's you there, and I hope you watched earlier. If you haven't, you must rewatch the show. I went over the trends for you, so you can just check how the trends, you know, how to trade with the trends in and out and that sort of thing, and the time frames. Should you use the higher, lower time frame, that sort of thing. Okay, so earlier in the video. Cool. Okay. Good. That's good to have everyone on board. It's absolutely fantastic. Really enjoying it. So that's the FTSE. We're not doing the FTSE. We're staying away from the FTSE. Okay, actually, I must go and have a look at your screenshot. See what you got there. Shall we? Let me close that other platform, which was very much a How can I put it? That was the platinum trade that I was looking at. Yeah. Right. Let's go and have a look at Shane. Okay. This one is the DAX. Okay. We shall just wait. See what you get there. Yeah, I'm looking for it and it's not there. Like, where's this thing? Yeah, no, okay. You need to speak to your trade here, Shane. It needs to go up now. Tired of seeing it in the red. Oh, gosh. Okay, like I said to you guys before, if you're stressing at night about your trades or you're stressing about your trades, especially the guys with the cash accounts, don't forget, if you're worried about the money, then you need to trade less, smaller amounts. Make sure you're not breaking the bank. A good place to start out is actually on these funded accounts because they don't stress you out as much. Well, they certainly don't stress me out. Okay. Let me go and have a look. See. Shane. Dum, 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 dum. We're looking at here, FTSE. Okay. Yeah. Did you say FTSE? FTSE long. Short FTSE. Short FTSE. What are we long the Germany thing? We want to short the FTSE. And you've gone on the. Not a lot of room. Not a lot of room there. I can see why you want to short it. I get it. Okay. I do get it. Totally get it. Okay. See what you've done. You've used the Fibonacci. You've run on the short run here, and you're looking for the money at the top here. Let me show you what my money would show me. My system or our system would show us. So you used Fibonacci to basically grab that level. Now that level, yeah, I get it. It's short, but it's only short for this short period. Doesn't really have much or many legs, very short legs. So your risk is all the way up here, which is quite far away, and your reward is here. So your risk to reward is the wrong way around. Your risk to reward is poor on the trade. So what I would do is rather wait for it to get back down to this side and then maybe grab the long trade, especially if it gets down to this level down here, which will give you a double bottom. That might give you a decent trade to the upside, but then you've still got a poor risk to reward here. This is not the FTSE's a bit iffy, I must say. I could do with a lot more off the FTSE. But yeah, you could get a short off the FTSE going down here. Hopefully, because the Germany, yeah, hopefully the Germany is not going to give us a similar picture, because then it's going to come all the way down to here. But okay, let's see what we get. Let's see what we get. The risk is not that high, but at the next swing point. Now, if you put your risk, you're going to put your risk over here, yeah, okay. Just above the level. and then run your trade down to here. Well, you could do it. You can do it. So now effectively, you're putting your risk around about the 87.15 to 87, let's say 87.20, 87.20, or you're putting it right here, which is really close, 87, 86.94. That might be a bit too close, so maybe the 87.11. And then you got some reward down to here. Not too bad. Okay, if you want to trade that. It's a very tight trade, very tight trade. But yeah, it can work. Yeah, it's tight, but it can work. I get it. It's tight, but it can work. It's a very small range, and that's like a really tight trade, but it can work. It can work. There's nothing wrong with taking tight trades. You can make them work. Yeah, no, if that's what you're comfortable with, then that's how you trade. You know, you trade in your comfort zone, and that's how you trade. That's fine. Let's hope Germany 30 doesn't hit your stop loss anytime soon. Okay. All right, Euro US dollar, looking at the 1 hour. So we always trade on the 4 hour, and okay, looking at 1 hour, do you think it's currently just taken stop losses? Also, could you call this a fake out for trend traders? So what we've got on the 4 hour on the Euro US dollar is we've taken it short and it's going down. We're in that trade and it's going in the direction that we want it to. If we were on the 1 hour, you're looking at a completely different trade. Let me just see, Euro US dollar. Are we on the 1 hour? No, we're not. We want to be on the 1 hour. Why am I not getting... Jeez, I'll tell you what. This thing's messing me around now. There, 1 hour on the Euro US dollar. Okay. That's what I was looking for. So the question is, on the Euro US dollar looking, do you think that it's currently just taken stop losses? No, it hasn't taken any money on the 1 hour yet. The money's further down on this. The money is, let me draw a little rectangle in here for you. The money's over here. So it needs to get to here to take the money. And then on the trend, just going to draw a little trend line in. Just so that you get a picture here. I'm going to draw this trend line over here. So now, there you go on the 1 hour. Okay, so guys, this is on the 1 hour. Because I just got asked now, looking at the 1 hour, do you think it's currently just taking stop losses? No. Also, could you call this a fake out for trend traders? No. What you got here on the 1 hour, that's just a spike. Not a fake out, it's just a spike. What you got to do when you draw these trends, put it on a line chart. Because that's the price. That's where we are. If you take it back to the candles, yes, that's liquidity, but it's not a fake out because it hasn't closed. There's still 27 minutes left on this candle. So what's going to happen with this now? Euro US dollar. What's going to happen with this now is it's going to sit on that. It's either going to close below it or it's going to close above it. And that's what you're waiting for. Now, it's a red candle, so there's a good possibility the next one will break through. And if it breaks through on that trend support, if it breaks through that, then it's continuing on its downward trajectory towards this 107,700 level. If it bounces and goes up in a green, then you could have it running up to the higher level, which is more than likely on the 1 hour up there. which is not good for our trade, by the way. But that's your trend. And what you want it to do on the short term is break out of that trend and head to the downside. That's what you're looking for. And then you'll get that sell. It's not a fake out. It's just, this is still in play. This is just a tail. What this tail can tell you, the tails are good because what the tails tell you is all the buyers are getting back into the market. We had a sell down to this level. And then for some reason, the buyers all decided, we'll get back into the market and we'll buy this all the way up to here. And they bought this back. So the buyers got back in. But that's not to say that's going to happen, because it's like maybe something to do with that time of the day where everybody's kind of doing something and somebody's talking somewhere or somebody's doing something and it's affecting the markets one way or the other. Or a market is opening or closing, whatever the case. And then you get these movements. But this just depicts that all the buyers are getting back into the market. It's not a fake out. That effectively is the next one. You're waiting to see if it goes up or it comes through and breaks through and goes down. Still a good 25 minutes left on that candle. And that's all it is. It's not, and that is just a simple system, guys. It's not the strategy. It's just the high probability. That's all you're looking for, is the high probability. Now, if you go to the 4 hour, you can still draw that line in if you want to. But what I'm getting on the 4 hour is an undecided candle. In other words, there's all the sellers, there's all the buyers, there's the body in the middle. That means everyone's kind of undecided which way this is going. Nobody's quite sure on this candle. Same as what happened up here. Nobody was quite sure which way it's going. It's kind of undecided. Normally when these candles occur, just kind of follows in that road. There's a turning point that's crossed over and gone to the downside. If you want to know more about candles, just download it off Google and just have a wee look at it there. It can give you a lot of information as to what's going where and what's doing what. So guys, hopefully we'll still have an account on Thursday, because the Germany 30 is heading in a bad direction, as is the US 500. But we do have stop loss in place, so we should be fine. Okay. Recommend always trade with a trend, even if it's in range. Don't short if it's bullish. What you've got to watch out for here, okay? If it's in a range, it's in a range. End of story. It's in a range. You're trading in a range. You're trading between those levels. Okay. Now, I recommend that you trade with the overall trend of any product if you want to be successful, because the overall trend will always win for you. It will always win over. But I also recommend at the same time that you counter trade, that you counter the trend when it breaks structure, which is confusing, isn't it? Because how can you be trading with the trend and then trading against the trend? Well, you have to open your mind up to trading both ways. So when I say trade with the trend, if you're looking, we trade three ways, as you know, with the trend, in a range, and counter trade. But if you're looking at a big trend, like we used to look at on the US 500, I'm just going to go to the weekly, just show you, well, you can't really show much, but the US 500 in general was trending up. So every trade that you took was long. And then it turned around and it counter traded and it went bearish and started trading short. So now you've broken the structure of the upward trend. Now you're looking to trade short trades all the way down. In that structure, you don't want to be taking long trades. You want to wait to take the long trades. You want to wait for it to break that structure and start heading the other way, that giving you the long trades, if that makes sense to you. So for example, on the US 500, we've taken a long trade. It was long, it was bullish, it came into a range, it sat in the range, it went bearish. On the bearish, it broke the bearish trend and started heading up, so we took the long trade. It came back, and now it's sitting on support, and while it seems bearish, it looks like it wants to bounce and head on back to the upside. So for the time being, it's counter-traded and broken, but it could break back to the downside again. There's a double bottom. We're hoping for it to continue on to the upside. You've got to open your mind up to you're trading in the trend, and the trend's going for you. Like here, you're going down, you're trading in the trend, so you're taking all your trades short all the way down here. Then it stops, it turns around at this level, and it starts heading up, and it breaks that trend. So that trend is no longer valid. That trend has now become invalid. So now you're looking at it's going the other way. So now you start looking for trades the other way. So effectively, you are still trading with a trend, but you're trading with a new trend because the trend has changed. I know it's confusing, but you've got to get your head around it. You've got to get a head around that trends don't stay in one direction forever. That's not how the market works. But if you look at the S&P 500 for the last 100 years, it's been going up. But in that going up, it's been going up, going down, going up, going down, going up, going down. There's been a number of trends at different times where it's been going up and where it's been going down. When you're in that trend cycle, you want to be trading in that cycle. That's effectively how it goes. So when it broke the upward trend and it started going to the downside, you wanted to be going short, 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 short. Then it breaks the other way. You want to be going long, 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 going to the upside. Unless, of course, it breaks to the downside again. And then we trade with support and resistance, and we use the trend lines in the time frame that we're trading on to see if it's counter-traded, to if it's broken structure, or if it's changing structure. Because it gives you the information that you need as to whether the structure is changing and it's starting to go the other way, because you need to know if it's starting to go the other way or not. You can't just rely just support resistance. Support and resistance will help you with your trading. The trend lines will help you to see which way it's breaking. In Shane's case, he uses a lot of Fibonacci, and that works extremely well as well if you know how to use it and if you know how to work with it. But you do need to know how to work with it. You need to know where the golden zone is. You need to know what it's all about. You need to know where to draw it from as well. That's why Shane takes smaller trades, because he trades on this last level here, for example, and he knows that that's his trade. Whether it's a good trade, a bad trade, whatever the case. So, if I put a Fibonacci now on the US 500, I'm going to put it on this last level here. And you can see it got up to the 38, turned around, bouncing off the 0. Hopefully it'll go all the way back up to the 61.8, because that's what we really want at the end of the day. And if you look at that, there is a level of money there. That's all you want. So if you want to trade with Fib, you can as well. It works well. It works extremely well. Right. Hopefully that answers some questions. Okay, the US 500, you want to go short in the H4, but I'm already long on it on the US 500 and losing, so... Okay, Shane, what I'm looking at, well, the reason I'm still long on the US 500 from my side is the double bottom here. There is a double bottom here, and there is also this breakthrough here. There is this support here. There's a lot of things going for it as far as the long goes, and even on the fib, it's kind of like got its opportunities to go long. But I will have a look at yours. The US 500. Let's have a look. There's a good possibility the US 500 could easily go. Okay, you sent me the Nikkei. That's pretty short. Short DAX. That's the Nikkei. On the US 500, you sent me the Nikkei. The DAX updated. Okay, cool. Love your update. There you go. Cool. Yeah, exactly. We're long on the US 500, and Shane's stressing me out going short because I'm thinking, oh damn. Yeah, no, we're kind of long on the Germany 30 as well, eh? Okay. Danny, did you get that on the breakout here on the US 500, how it works? Okay. And the other thing you will have noticed is you get different opinions from different traders and different systems and different things going on. And that's what makes trading 50-50. Some will call it long, some will call it short. It just depends who you are and where you are. You have to understand that the markets are not all in your favor. If the systems were perfect, let's say robots were trading the market and they got it right every single time, which they won't, but if they could, and the reason they won't is because they're programmed by us. But if they could get it right, the market would end in a big fat zero and nobody would make money. Do you get that? If everybody was right, in the market would end on a big fat zero. Fact. Okay. Okay. The Nikkei is the Japanese 225. The Tech 100 and NASDAQ is the Tech 100 NASDAQ is US. The US 500, S&P 500, ES 500, those are all index US 500. You get Dow 30, Dow 40, Wall Street. That's the Wall Street. Spires the 100. You can use that. Yeah, that's cool. But the Nikkei is the Japanese one. Okay. Yes, I can see Shane's losing at the moment. Hopefully it'll pick up later, like his gold did the other day. That'll be fantastic. Yes, the Nikkei is the Jap 225, 100%. The Nikkei is the original name of the index. Just like the US 500, the original has always been the S&P 500 index. Wherever you go, you can get the S&P 500 index. Okay, so just keep that in mind. Yeah. Let me just see here. You're having fun today, eh? You sent the Nikkei, the Jap 225. I'm pretty sure you did. Let me just double check that I'm not going insane. But I think you did send the Nikkei. It says US 500 on your title, but looks like what I've got here. Well, it's either the Dow or it's the Nikkei. It looks more like the... Actually, the prices look like the Dow, but the name says Nikkei. That's the Nikkei. You sent me the Nikkei, which is the Jap 225. Okay. Cool. Got it. So the US 500 looks like this. S&P 500. That's what we're looking at. Okay. Yeah, it's the JPY, yeah. The Japanese one, yeah. Yeah, totally. It's Japan, yeah. Totally Japan. Okay. Don't worry, I mean, it is actually, it's this one. Hang on, let me go and find it for you. You sent this one, okay? There you go. And you'll recognize it because it's falling fantastically. Actually, good trade, to be honest with you. Yeah, it's going down perfectly. Yeah, that's, yeah, okay. Yeah, there it is. There's the JPY. And yeah, it's definitely going down. It seems to be like really going down, doesn't it? Okay, yeah. That looks like a pretty interesting trade. Okay, what you got to watch out for though, Jane, is it looks like it's hitting some support here. Down here, I can see levels. So it could even be heading for a double bottom. So just watch out for that. It looks like it's falling hard, but there does appear to be some bottoming here. Okay, so just watch out for that. If you do decide to trade that thing. Wendy's missing all the fun today. Funniest stream I've ever been on. And that really is thanks to, I gotta give Kevin and Shane big shout out today, guys. You've been a big part of the show today. Great stuff, and other days as well. I love it. Big shout out to you guys. Thanks. Shane doesn't need to sleep. He's fine. Don't worry. He just needs to stay here and keep giving us trades so that we can get on with it. Love it to bits. Where is Wendy today? Yeah, what's going on, Wendy? Have you jumped ship and gone off to that other trader that, what, I don't know even what their names are. Yeah, no, that's great. Okay. Maybe there's another trader out there that's got a live show at the same time. No. I think is it Tuesday or Thursday that Wendy's busy? I don't know. I can't remember which one. Yeah, no. Good stuff, guys. Good stuff. Greg Sicker. Okay, good stuff. Good stuff. So we've had quite a decent show today. I've got to say it's been good. It's been absolutely fantastic. I actually don't want to close the show down, but I do have to. I've got things to do, so I do have to move on. But it's been so good today, and I'm really going to enjoy Thursday if you guys are here. Such fun. I do hope I don't have the technical problems on Thursday that I had today. I must actually have a look at this whole setup, see what on earth is going on, and why I had all the technical problems to start with in the first place. I tell you what, I didn't know if we were going to have a show today. It was hectic. It was telling me, nope, yeah, I'm not going on. And you know, I don't know if like these IT guys think that everyone's an IT genius or something, that everybody can just write their own programs or something, because the terminology they give you is you just look at it and go, what? It's like looking at that guy's spreadsheet, Kev. Oh, no. Yes, I do live every Tuesday at 11 GMT plus 2, and I also do live on Thursday at 2:30 GMT plus 2 a bit later, so that we can cover just about everyone around the world as much as possible. I'm sure there's a few people that miss out, but I try and cover it as best as possible because I'm in Africa and it makes it tricky. You know, our time zones are way out. So Shane, thanks Greg, thanks everyone. Dave, thanks. Hope to see you all Thursday. Gavin, thanks. Guys, it's good to see you guys again. It's good to have you on board. I am going to consider that whole Zoom thing and WhatsApp thing and whatnot. I'm going to see what I can do about that. And, you know, try and get some specific members on it and what have you. But I think Australia works out on Thursday. Not too bad, I think. Should be okay. Yeah, the timing works. And yeah, you guys moved your time again. I must figure out what time my football's on now because it's obviously moved again. You guys keep moving the time around and like it's 2 hours this way and then it's 1 hour that way and confusing as hell. Never know what time it is, but it's great. Okay, so it's 11:52. 11:52. This yeah, we're 2 hours out now. All right, 2 hours out. What were we before? An hour? Don't know. Okay. But let's go for it. Guys, I'm gonna actually head on now because I've got people waiting for me out there, so I want to go somewhere. And I'll probably get it in the neck just now. But guys, thanks for being here. It's been the most fun show. And I do hope we can have the same amount of fun on Thursday. Bring it all on. Let's do it again on Thursday. And thanks for watching, guys. Thanks for being with us. I hope your trading goes well. And, oh, Australia's also got an hour back. So I'll have to catch up. Okay, I'm GMT +2, GMT 10. We'll get there. We'll figure it out. And thanks a lot. We'll chat to you soon. We'll see you on Thursday. Have a great trading day tomorrow, today, the next day, and we'll have some more fun on Thursday. One of these days, we'll increase the amount of shows. We'll see how we go in the future. I just have to look at time and how things go. Guys, thanks.